Welcome everyone. In today's video I wanted to talk about how you can get leveraged long exposure to coins in a decentralized manner. So this is part 3 in a 3-part series that I've been doing in how to get leveraged long in various different ways using DeFi. So the first video was talking about how you can structure a leveraged yield farming position in order to go leveraged long different DeFi tokens. Part 2 was talking about how you can use money markets in order to construct a leverage long position. And so part 3 is using decentralized exchanges like Drift and Mango markets in order to get leverage long exposure as well. So if you're not familiar with Drift, this is on the Solana ecosystem. There will be various different perpetual futures trading protocols out there. So like DYDX on Ethereum, Perpetual Protocol on XDAI. So there are various different perpetual futures exchanges out there across all of the chains. So this is merely just a proof of concept video. So you'll be able to do this no matter the ecosystem that you're playing around in. I like to use Solana because it's cheap and it's fast. So to start using Drift, what you're going to need to do is deposit some stablecoins into it. So for the purposes of this video, I'll just be depositing 400 USDCM. So we need to just approve this in my wallet, and then I'll talk to you more about Drift. So Drift is a new product that's recently been live on mainnet for, I want to say, around a month now. So there's still a few features that might be missing that are already there for other perpetual futures dexes out there. But the markets we have available right now are Solana, Bitcoin, ETH, Luna, Avalanche, and BNB. And what's nice about perpetual futures exchanges is that all they need in order to trade any market is simply an oracle. You can get leverage long exposure to all of these tokens, I think up to 5x leverage using Drift. So I'll show you how you can go ahead and use it. So we can choose whatever market we want. I'm just going to use Solana. So I'm just going to use Solana for the purposes of this video. Perpetual futures is off limits to a lot of people out there. Say for example, I'm from the UK. I'm unable to trade perpetual futures from a centralized exchange. However, I'm able to use a DEX in order to trade perpetual futures, which is nice because now I've got leverage long exposure. So if I wanted to buy Solana perpetual futures, currently right now on Drift you only have market orders, which is unfortunate, but they'll be implementing market orders, stop losses, limit orders, that sort of thing in the next coming months. So we have up to 5x leverage here. I'm just going to choose 2x here, and then I'll buy $500 worth of SOL, which is 2.6679. And we can see here the slippage tolerance. So Drift uses a virtual AMM and it doesn't use an order book. So you will have slippage tolerance here. So essentially you're trading against a pool. So the estimated slippage is very low, so it's doubtful that I'll be suffering any at all. On my estimated liquidation price is at $46, and my account leverage that I'm using is 1.25x, which is very conservative if you think about it. A lot of centralized exchanges out there used to allow you to get like 125x leverage, which was pretty mad. But let me just press buy here, and then we'll have the confirmation order come up. So the order type, the size, entry price, slippage, and here the fees. So the fees are a little bit steep here on Drift. It's 0.1%. So remember, you are using a blockchain to do this, so it's not going to be exactly as fast as a centralized exchange. So if you need to do like trades that where the orders need to go through in like a second, then this might not be it for you. But if you're looking to do trades on like say the 30-minute, 1 hour or daily charts, then it might make a little bit more sense to go ahead and use a DEX like Drift. So there we go. I've set up my order. Sol perp, we're going long, about $500 in size. And we look here at different things like trade history, liquidations, funding history, and unrealized funding. So up here it has my total collateral, unrealized P&L, free collateral, my leverage ratio right now. So if you're not familiar with perpetual futures, essentially what they are is just derivatives contract that allow you to get leveraged exposure to whatever the underlying asset is. So for example here, I'm trading Solana perpetual futures. So the perpetual futures contract should track the price of Solana itself. So that's the price of it up here. But we also have the index price, which is the true price of Solana. So right now, the perpetual futures price is above the index price, meaning that people are extremely bullish Solana on Drift. and you're going to have to pay a funding rate APR in order to stay long your position. So I'm paying roughly 75.26% of my position per year in order to stay long Solana. But if we go over to something like Avalanche, the funding rate is actually negative. So you'd actually get paid to go long Avalanche perpetual futures here, because the perpetual futures price is actually below the index price. So to just round off the drift portion of this video, I'm just going to close this position in order to show you how it's done. So you can choose how much of the position you want to close, but I'm going to close 100% of it, and then just approve this in my wallet. And so the next protocol we're going to take a look at is Mango Markets, and there are two different ways that you can get leverage long exposure on Mango Market. Okay, so now let's take a look at Mango Markets, and I think this is the best decentralized exchange on Solana right now. Now, why do I think this? Because you have a swap function, you have also spot margin trading, as well as perpetual futures. And the killer feature about Mango Markets that I think is amazing is the fact that you can deposit Bitcoin, Mango, ETH, Sol, stablecoins, Serum, Ray, COPE, FTT, and MSOL, and then use them as collateral to trade against. So this is basically a decentralized FTX, and I think that every perpetual futures exchange should be more like Mango Markets, in the sense that you can use any arbitrary collateral to trade against. Mango Markets offers spot margin trading, like I said. So if I go into Sol USDC here, you're able to, if I go to Sol USDC here, we can see here that you're able to get up to 5x leverage when doing spot margin trading. For the Solana perpetual futures, you can get 10x leverage. So if you're familiar with centralized exchanges, or you just saw that quick tutorial that I did with Drift, it's going to be fairly similar. So Mango Markets uses an order book. So Mango Markets uses an order book versus Drift's virtual AMM. I can either do a limit or a market price. I'm just going to do whatever the market price is. So now that I've got my collateral in here, I can start to do trades. So let me just market long Solana. So if I press the 100% here, I could market long 10.2 Solana. But instead, I'm just going to simply be doing $500 worth. So remember, I'm just doing a market order, but you can do limit orders as well. So once I press approve, this should take a couple of seconds and my position should appear. So there we go. Essentially what has happened is that I have borrowed 85 USDC, and then I've used that 85 USDC I've used the 85 USDC as well as the rest of my collateral to go long Solana. So I'm going to need to repay this back in order to exit my position. So because I've borrowed USDC, I'm going to have to pay this borrow rate. So that's 5.64%. What's nice about Mango Markets as well is that I have this Sol here, and I'm getting paid a deposit rate for actually having it on Mango Markets, which is really cool. So in order to close this leveraged position, you can go back to sell here and then type in this amount. So let me just do it now. And then press that, and then you can return all the money that you borrowed. And so there we go, I've closed my position. So when you take into account my negative P&L and the fees that I paid, I lost about 63 cents on that trade, which is fine by me, really. The whole process is similar if you wanted to trade perpetual futures. So you do a similar thing, you go market or limit order, and then you have other orders that you can take here, and then however much size you want to take. So just know that you won't be able to spot margin trade everything, and not everything allows you to trade perpetual futures on it. So for example, you can't trade perps on COPE, and you also can't spot margin trade ADA. Lastly, like as you can see here, the order books on Mango Markets aren't super thick. So I definitely recommend checking out Drift Protocol, because they're a protocol on mainnet without a token, so there's a good possibility that you could get an airdrop there. I'm not saying they will do, but I think it just makes sense given the fact that DYDX did an airdrop for its past users. So definitely keep that in mind. So just remember that none of this video was financial advice, and you're responsible solely for your own finances. So thank you for watching. I hope you enjoyed this video, and make sure to subscribe for more videos like this one.